Good morning, everybody. As has already been mentioned, I'm Keith Baer. I'm a fellow at the Centre for Alternative Finance, part of the Judge Business School at Cambridge. My qualifications for chairing this panel, I guess, I worked for one of the fintechs, if you like, with a 25 billion turnover, which is IBM, so I know my technology from there. I'm now obviously at Cambridge, and I also on the advisory board for a number of fintechs and also mentor at the Barclays Rise Accelerator as well. So with no further ado, let me quickly run through the panel. If we just take a minute each to introduce ourselves, starting with Z.
Thanks, Keith. My name is Z. I'm from OCTOPUS Ventures. We're one of the largest and most active venture funds in Europe with 1.2 billion sterling under management. We exist to help pioneers change the world. And in particular, I'm sort of looking after our Future of Money pod, which looks to focus on companies that are looking to revolutionize the way that we exchange and allocate resources as a society.
Good morning, Anthony Woolley. It's a pleasure to be here. I'm responsible for innovation for SocGen in the UK. What does that mean? We don't believe innovation is something that happens in a lab in a corner. We drive an open innovation strategy. I work with all of our business lines and business heads on their transformation agenda because innovation is fundamentally about business change. Technology can be a catalyst for that, but not always. We have an innovation fund. We launched €150 million innovation fund. We use that for two things. We take stakes in external companies that we think are strategic to the development of our business. But the innovative bit, we also use it to create businesses. So we have a fantastic program where we take employees out of their roles full time and give them the opportunity to launch and spin out businesses.
Thank you.
Hi, I'm VALLI. I look after the commercial businesses for EARTHPORT. We focus primarily on enhancing cross-border payments for businesses, and we've recently been acquired by Visa.
Hi, I'm LUCIE MUNIER from QADRE. We're a blockchain product development company, and I work predominantly sort of a mixed role between the regulatory side, so early consultations with the FCA around crypto assets, the European Parliament Innovation Group on various roundtables involving GDPR and blockchain, and I recently published an article on that subject in the Journal of Securities Operations and Custody. So very keen in the whole debate around regulation versus emerging technology or working with emerging technology.
Hi, I'm SOREN MORTENSEN, Director Global Financial Markets at IBM. So I look at industry-specific with IBM within financial markets across all technologies, ranging from AI via blockchain all the way out to quantum.
Thanks, Soren. So let's start off with a fairly easy question. We've seen much disruption in financial services over recent years, varying from open banking all the way through to decentralized finance. In your view, what represents the biggest impact we have seen in recent years? So, Valli, over to you first.
Thanks. That's a pretty wide question. So I think one of the biggest things that has had impact has been the increased visibility and collaboration and acquisitions that we've been seeing. Consolidation in the market has given a much larger voice to some of the technologies that have been bubbling underneath. Everything from the payments sectors, which have driven cross-border enhancements on the P2P and B2C sides, and now starting to trickle into B2B, through to blockchain-enhanced tokenization of products that we're seeing and we just heard about now. As we continue to see more of that, I think we will see more consolidation in the market this year as well.
Great. And Z?
I want to talk about two things, I guess. The first one is kind of no matter which way you cut it, it's hard to discount the impact that public ledger crypto has had in the last few years, whether that's by number of devs who are working on projects in the sector, whether that's by sort of total market cap of all the crypto assets you see out there. I think it's like 300,000 and 300 billion respectively. It's pretty impactful, right? And from the perspective of being disruptive in the traditional innovator's dilemma perspective, or being disruptive like a school child in the classroom, and sort of just causing the regulator headaches and all this sort of stuff, it's pretty big. And then the second one is kind of just around like consumerization of finance. Historically we've had the consumer experience very much being tied up with balance sheets, and people who own balance sheets and like to run them, have had very different priorities. And over the last few years, whether that's been driven by likes of Revolut and Monzo or Venmo, whoever it might be, that's a massive trend that is only sort of starting to take off now, and the implications are vast.
Great. Thanks very much. Any other comments from anybody?
Yeah, maybe, because I'll take a slightly different tack.
Okay.
So you'll hear a lot in this conference about crypto assets, AI, and various emerging technologies, but the question is around what technologies have had the most impact on financial services, and they're often the ones that people stop talking about, the ones that are actually happening right now. So I would argue it's cloud and the related API technologies. In the dot-com boom, it would cost a startup upwards of 200,000 to get off the ground. Now you can do it on Azure, AWS for a few thousand. So I think these other technologies are disruptive ideas. They're coming, but we mustn't forget that what's under our feet in terms of virtualizing infrastructure. I think large institutions need to proactively embrace that to transform their infrastructure as well.
Great, thank you. Let's talk a little bit about open banking. This is obviously one of the big trends we've seen here in the UK with PSD2 and its implications, the open banking implementation entity, the fintech innovation we've seen a lot of already. But has open banking actually delivered on its promise yet? And if it hasn't, why not? Any thoughts on that, Valley?
I think no, it hasn't yet. Its penetration is low. Even awareness at a market level, if you look at outside of this room, it's quite small in terms of your average person, how they interact with it. It is starting to become a more impactful opportunity for, I think, a lot of the major banks and are using that technology better. Everything is, as you said, around the customer focus, around the UX. And that is enabling businesses who are seen as being behind and being disrupted to very quickly catch up. But I don't think anyone's doing it hugely effectively yet. It's still a little bit of paint on the house.
Great. Any other?
Yeah, a quick comment on that. Whilst I agree with that statement, I also see that open banking has the potential for creating an innovative environment for the banks and stronger collaboration between the banks and the fintechs. And I think this is something that we certainly see with open banking platform will take off going forward, but it will take time. I agree with you.
Okay, thank you. Next one. Obviously, another one of the key disruptive trends is artificial intelligence, machine learning, etc. It's really been exploding in financial services. I'm sure we'll hear a lot about it later today. That's kind of illustrated, I think, by the work that we're doing from a Cambridge point of view with the World Economic Forum. We have a survey coming out around September or so on that subject. So for those of you who haven't yet responded, please take a look at our website and you'll hopefully have a chance to put your opinions in on that. But Soren, the benefits of AI are obviously getting stronger, but there are also major risks. What do you see as the playoff between those two factors?
Well, I certainly see AI being used throughout the end-to-end process in financial markets, whether it's in research, whether it's in trading, sales, post-trade risk management, and so forth. And we see a huge take-on AI, and we see that trend continuing. However, within financial markets, we need to ensure that AI systems are trustworthy. Not only the ones that you use for RPA and process automation, but especially when you're looking at decision-making and other uses of AI. So for us, we are heavily involved with the European Commission that has just issued the 7 requirements that all AI system has to comply with in order to be trustworthy. And that includes things like make sure your data is of high quality, make sure your data is secure, make sure that you can manage bias in your data, make sure there's transparency. And at the same time, we're also working with the regulators, the European regulators, looking at how do you ensure that the data, the code, the models reflect your corporate ethics? And how do you ensure that all of these, if they deviate, if there's bias, how do you manage to bring it back into your corporate ethics? I know there's a panel discussing ethics around AI, but it's definitely from a regulatory perspective something that the regulators would want banks and financial institutions to demonstrate in the future. How do you manage that?
Okay, any other comments from Adoni? No.
Just to emphasize, I think one of the biggest risks with AI is misuse of data. For AI to work effectively, you need extremely large volumes of data. And I think it's fair to say that big tech has made extremely good use of that. I think within the regulated financial services industry, there's a responsibility on us, our clients and our regulators to look after that data. And so I think the priority as we leverage on AI applications is not to do it without forgetting looking after our data.
I think that's a really good point, right? And the trouble with lots of this stuff is that there is almost a fundamental trade-off between privacy and innovation, right? If you want to innovate, if you want to have data to crunch, if you want to be able to find what the underlying statistical correlations are that help you make decisions, you're going to have to give up just fundamentally on privacy on all this stuff, right? And as a society, we just don't know where we sit on that yet. We have, some people, most consumers probably sitting on the privacy first fundamentalist side of things. You have the decision makers at these big tech companies on the innovation first side of things. And we just have no idea where we are. And I think it's probably up to lots of people in this room and sort of in the wider community to really actively think about it, because it's, you can say we have to think about the trade-off, but where do you stand on that? And it's really important.
I'll just add to the point there. I think what you're saying is very key, the fact that we don't know where we are yet. And I think we're in a huge learning curve as a whole ecosystem at the moment. We can talk about blockchain and GDPR and how they interact and how they are perceived incongruencies between them and how we can get around that. But there are also perceived conflicts between different regulations around PSD2 and GDPR and how we use data. So I think a way to sort of catalyze that process of finding out where we are is to encourage more and more discussion between regulators, between innovators, between all the big players, the small players, just to have a more informed landscape of what's going on, and then we can hopefully get there quicker.
Thank you. And since you mentioned GDPR, what would you say, is it really supporting or is it really hindering the development and disruption that blockchain technology can provide?
I think on the face of it, it could be argued that it would have been seen as a hindrance, but when you actually look into the details of it and how it can interact with the different aspects of blockchain technology, I think they do pursue the same philosophical aims, and it's just about learning how to use it in slightly different ways, on ways ways we haven't been used to in the past. For example, there's a lot of talk around the right to erasure of someone's data with GDPR, and how does that then fit in with an immutable database such as blockchain. But we're looking at more interesting solutions now of how you interact with off-chain storage as well. There's even some research going into editable blockchains. So yeah, there are solutions, and it is moving, and there is a lot of debate in the area, so it's going forwards.
Great, thanks very much. We've seen a major spike, obviously, in Bitcoin prices over a recent couple of months. We've also got the likes of Bakkt and Fidelity Digital Assets that are in the process of launching their services. So how do we see crypto assets as a disruptive force? We have already talked about tokenization in the previous session, but if we take a step back and look at crypto assets, what is your perspective in terms of what the impact might be from an institutional point of view? Anthony, any comments?
Yeah, I think digital assets will have a significant impact on the financial services industry in the future, but within the regulated financial services industry, I think you've seen the last few years some rapid innovation happening on the public crypto side of the world and various developments internally. And between those are what I call a regulatory firewall, and that firewall's melting, and those two worlds are coming together. So, and I think some of the developments you see, though, in the public world is about people rediscovering why financial services has developed how it is over many hundreds of years. We see debt products emerging now as well as equity products, etc. I think ultimately that's part of the convergence, the education that ultimately financial services need to be provided through regulated structures to protect our societies, to enable people to look after their finances safely and securely. At the same time, it's a wonderful arc of innovation. It's one of my favourite topics. And I think you will see with token economy and other things some quite fascinating and transformative disruptions happening for the industry in the coming years.
Great. Any other comments on that?
can comment on. We see digital asset as just another asset for financial institutions, but that will have a phenomenal growth. And if you look at, for example, Selland, who said by 2020, for example, the STO market will pretty much be around the $9–10 trillion, and that just in a matter of a couple of years, compared to more traditional financial instruments that have taken 20-odd years to get to that level. There is a clear indication that liquidity is going into the digital assets, whilst more traditional assets are reducing in volume. So definitely it's there to stay. How it's going to be shaped in the future, we don't quite know, but because it's an evolution, but it's definitely a growth area.
Okay, thanks very much. So we look at a kind of slightly wilder side maybe of crypto assets, specifically decentralized finance, which I mentioned in the introduction. So Anna last had a look, which was end of June. There was around $593 million, quite a lot, of Ether actually locked up in decentralized financial systems, 74% of that being in Maker. So what is it? Is it an exuberant exploration of how finance could actually work in the future in an unliberated kind of way? Or is it, are the regulators really going to catch up with what's actually happening, portend of things to come, if you like? So Z, any comments on decentralized finance?
I don't really see a future in which we don't have decentralized finance, right? The way the internet has evolved, it's freeing up sort of information at zero marginal cost. It's been great for so many industries, and it hasn't yet worked for money because you can't do that for money, right? Because we need scarcity, and the whole sort of premise of decentralized finance is allowing us to create this digital scarcity without then relying on anyone as a single source of truth. So, the question is then, what's the path look like between where we are today and a world in which that becomes sort of true and everyday to everyone. If you look at the ecosystem as it stands today, it's a massively closed off ecosystem, right? The people in this room will have interacted with some of them. I've been to conferences where everyone in the room has, made bets on Augur, and everyone uses MetaMask and all this kind of stuff. But the minute you step outside, no one has any idea what you're talking about, right? And the people in the room don't quite understand why either. They think it's a marketing problem, they think it's whatever. It's a product market fit problem, right? And what does the path look like between where we are today and actually getting wider product market fit? That is to be determined, and we're looking for companies that are able to make a dent in that space. But as a sort of as a future construct, I am optimistic that we'll see it come to forth.
Lucy, any additional comments?
I like your point, Steve, about people on the outside world actually have no clue of the intricacies of what's going on, and I think it's perceived as being a bit of a crazy space. But it is an interesting. It has been amazing, like watching the rise of Bitcoin and other cryptocurrencies, and see how it has challenged financial institutions. That we are getting buy-in from a lot of traditional financial institutions, and it has made people turn their heads and pay attention to it. So I think it's interesting in that sense, and it will be interesting to see going forwards how the interactions continue and how the whole crypto asset space matures, because we are still talking about emerging technology, and emerging is the key point. It's not there yet, but it is in development, and it will happen in the near future. So interesting space to watch for sure.
Right. Any other comments on that? No. Okay, Libra's obviously had quite a lot of publicity already, and there's going to be later discussions on it, but I think everybody's going to have a point of view of that. How significant does it be? What the journey is going to be in terms of how it develops. I'm running the Libra testnet on my laptop, and it's obvious that not a lot you can do at the moment in just minting coins and feeling temporarily rich, but it shows the kind of potential, I think, when people start building their own applications on top of the testnet in the first instance. So how do you feel it's going to play out as a disruptive force? Is it really going to be significant, or is it going to be a journey which doesn't lead anywhere? Soren, any views on that?
Well, I got many views on it. Where do we start? I see the flashing zero here. I would say 3 points. I mean, Libra certainly has the opportunity to be very, very disruptive, and it certainly has the opportunity to become a power in developing markets. I mean, the intent is to target the unbanked. My concern with Libra, or not concerns, but looking at it, I would say, well, point one, given their track record on customer data, Facebook doing the KYC and the AML is going to be challenging. Point two, in certain economies, Libra is going to come in between the merchants and the central bank as a private company held currency. How much protection can you have for the end consumer on that? And then thirdly, I would also look at your target client base, the 1.7 billion unbanked. It's been tried before in the sense, and there's been some huge successes in Africa with banking on mobile phones, with people who didn't have a bank account banking on mobile phones. Whereas with Libra, you're targeting people, unbanked people in countries where Facebook has either been banned permanently or temporarily in certain countries, as well as how many of these people have mobile phones or access to internet. And last but not least, and I know Anthony's going to talk about this, how kindly are the regulators going to take to Libra? You're not only going to be regulated in one jurisdiction, you're going to be regulated in multiple jurisdictions. And so whilst we've seen that working in Europe, certainly when you go outside Europe, and let's say, for example, getting agreement between Europe and the US is going to be a bit of a challenge.
So obviously no banks in the participant members at the moment. So Anthony, your view from a SocGen perspective?
I think what Libra brings is it brings the disruptive concept of digital assets into the public consciousness, actually, into the wider population. I think since it's been announced, the various companies involved are getting a crash course in financial regulation. And ultimately, if it's an environment that complies with financial regulation, then there will be banks in there because by definition or implication, that's ostensibly what a bank is. I think Mark Carney was talking about Libra shortly after it was announced. And I think from a regulatory and a government point of view, what they're primarily concerned about is just making sure that investors are protected, that anti-money laundering regulation is appropriately applied, etc. And as long as those things are done and society at large is protected in the right way, I think it's a good thing. I think it's the first announcement. I'm not sure if it's the one or not that will be successful, but I'm sure others will follow.
And of course, Visa are a member, one of the 28. I don't know if you've got any comments, Valley, since you're now part of Visa.
No comments. We're a little bit too early in the process to be making statements like that. But I do think that there's a lot of smoke here, and you know, it's yet to be determined if there's fire. It's a convenient message that's being used a lot of places, but you know, you have comparatives already in existence. You know, WeChat Pay and alternatives that you know, offer a different mechanism, plus there's cultural differences and acceptances, and there's a long way to go before Facebook can just say that this is going to be the next thing.
Okay, so smoke, fire, maybe some mirrors, but let's see.
I think, I mean, we sort of talked about this in the context of digital assets, right? And I sort of feel like digital assets we've had for a long time. I've done online banking since I was at like my undergraduate. WeChat's been around, PayPal's been around. I think it's sort of less about digital assets and more about sort of distributing the sort of authority, right, that holds that ledger. And you know, Libra clearly isn't there in its current iteration. But it could be a pretty interesting angle of attack, right? Into, you know, today we've got however many, there's 20 sort of institutions that manage to hold the node keys to that. But in the future, you never know, right? If they sort of throw it out there. I mean, part of the problem with lots of public chain assets today is that they can't really coordinate in the same way that an institution can in terms of building product market fit and getting us to a stage where it's useful for people. I like to be skeptical of Libra, but actually I can see some light.
Okay, thank you. Right, we're nearly out of time, so just to take 30 seconds each, if we can, just to talk about, if we were in London Fintech Week in 5 years' time, looking back, what would we say the most disruptive trend would have been in fintechs? Soren, 30 seconds, at most.
Most disruptive trends. I would actually, sorry?
Okay, yeah. Can you say where you are on quantum? The quick question here. You can put it in the context of the question I asked as well, if you want.
Okay. Well, I'll answer on quantum. I mean, we're starting seeing some real use cases. One which is on security, and that also applies to cryptos and what have you. So certainly building quantum resilient security solution is actually quite trendy right now, because imagine if you have a quantum, if you have a high resilient security today, if you take that and you transport it 10 years into the future and you use quantum in the future onto your security today, what will you get out of this? So we're building quantum resilient architectures that will prevent quantum in the future attacking your networks and environments of today. Two other areas, very, very quickly, fundamental review of the trading book and anti-money laundering.
Okay, and on quantum, I think there was a news item last week saying that RSA encryption, I forget the length, the strength of it was cracked in 8 hours by a quantum computer, so it's already happening. Lucy, any quick comments from you on future state?
I think one thing that will be quite interesting to watch is the whole STO space. It was a challenge to how companies raise funds, and it was quite democratized. So I think it obviously got a bad name in the beginning with the whole ICO trend, and quite rightfully so. But again, a maturing in the whole blockchain space and crypto asset space, and further conversations with the regulators and the innovators will lead to a more mature application of the technology generally.
VALLI, any comments from you?
Yeah, I think probably what we're most likely to see in the next 5 years is different suppliers of the key financials coming through large tech. And I would say Amazon is probably one of the better plays. Facebook with Libra might not be working today, but they have the customers. And one of the things that we often forget about is who has the customers and how quickly they can adapt to delivering whatever the underlying technology is underneath that.
Thank you. Anthony?
Up until now, disruption in financial services industry has really been in retail and B2C. What I'm interested at the moment is how disruption is emerging in wholesale banking in B2B. I spent much of my career working in capital markets, building fixed income electronic trading platforms. Capital markets is immensely complex infrastructure built up over 30 years. And we've often wondered, it needs sorting out, and we're trying to work out how innovation and transformation is happening there. It's clearer to me now that I think that's going to emerge from the primary markets. You can see what's happening with digital assets. They've been traded for years in secondary markets. Primary and secondary have been largely disconnected. So I think what we're seeing is emergence of issuance in the private markets through these sorts of digital assets. If people can tie legal ownership, so I can go and buy a shard of the shard, that's fantastic, right? And once those primary markets, I think, and we've unlocked those trillions of dollars of assets in the private markets, then hopefully we'll have an infrastructure that will streamline and simplify the infrastructure of the secondary markets. And then that'll be really transformative.
Actually, I agree. I think that capital markets have been really underserved actually by sort of the technology, what we know as the sort of tech startup space of the last few years. I've kind of watched enough interviews from the late 90s to know not to make sweeping predictions about what's going to happen in 5 years' time. But I think what I would like to see, and this is certainly a personal view and not reflective of the organisation I represent, is sort of real stable coins, right? And what I mean by that is not a fiat coin, right? You have Tether and you have Gemini and all these kind of sort of cryptocurrencies looking to represent a fiat currency. But actually, if you look at the history of fiat currencies, they're incredibly unstable. I think the stat was 99% of currencies have lost 97% of their value compared to gold since 1970 or something like that. Whereas, a real stable coin that can hold its value in the real world rather than hold its value against another manipulated currency would be great to see over the next 5 years.
So I'm not sure if that's a pitch for Bitcoin or for Libra, but either way, I'd like to thank you for your attention. And if there are any additional questions, please ask us in the break. So thank you very much.
Thank you so much. And thanks for a great panel. Thanks, Steve. I appreciate it.